Hi guys, welcome to Investsphere Wealth. So what is happening today's market is something new. Every investors are worried about what is new in the market, where I should allocate my new funds. So here is the trick, like everybody is talking about SIF. So let's understand what do you mean by SIF, that is specialized investment funds. If you are looking for investing in a product which is governed by SEBI, right, and within a framework of mutual fund, so less tax burden and less anxiety and more flexibility in terms of management, like the fund manager is having more space to manage because of their entry and exit points. So entry is anytime you can entry, but exit there are maybe 1 or 2 days in a week. Like different SIF format may have different rules, but because of these small rules, which is beneficial for the fund, which is beneficial for the fund manager to play different strategies, hence it is more attractive than mutual fund and less tax complications if you compare with PMS and AIF. So let's understand what is the difference between SIF and mutual fund. So SIP is again one type of mutual fund, but wrapping product of, let's say, the minimum ticket size is 10 lakhs, so that the HNI client should feel privileged that this investment is something better, something more flexible. So let's understand what is the difference. So first difference, today if you go for a plain vanilla mutual fund, there is no short or long calls, which is into derivatives. So people, those who would like to have a product where derivative can be playing a very vital role. Say for example, for the last 1 year, there is no return made in the market, equity market. Plain vanilla mutual fund, let's say flexi cap, mid cap, flexi cap or multi cap kind of strategy is not giving any returns, hardly 2-3% returns. But at the same time, if it could have been invested in a SIF format, and if I have taken, or fund manager have taken some short positions, when market going down, they are booking profit. When it is going up, then again they are going to book profit in terms of long positions in derivatives, along with the maximum money into the plain equity investments. Or they can park in arbitrage options. They can go long or shorts. They can unhedge positions. So up to 25% there is a limit, so they can play on. So these are the few additional things which the fund manager is going to do in this particular wrapping product, which is called SIF. This is definitely going to help, and this is definitely a game changer. So SEBI approved it, and there are few companies those are running as of now. They have launched already in the market. So soon we will be also coming up these products from different AMCs to you, and we will discuss as per your requirement. You can choose which fund will be best suitable for you. Let's understand the tax perspective. Even if you are playing in derivatives, but within the fund structure, so this is going to be treated as like mutual fund only. So mutual fund with taxation, like if you are holding it for more than 12 months, it is 12.5. If it is less than 12 months, then short-term capital gain, that is 20%. If it is a debt structure SIF, then same taxation as per mutual fund, debt mutual fund, so 30%, right? And it will be definitely added in your income bracket. So if you compare with AIF or PMS, like if you talk about CAD3 PMS, CAD3 AIF, sorry, there the taxation is 30% plus. So again, this is a product which is really going to add a lot of value. Okay, simple to understand. Anytime you can invest, anytime you can take out in some funds. Some funds there may be some restrictions, like every week 1 or 2 times you can withdraw, but that is good for you. So in this way, I think SIP is the next game changer in the equity market, in this mutual fund industry. Excited now? Let's understand, before putting money in any SIF, so you need to really study the risk factor. What are the risks is involved. So first risk is liquidity risk. So whenever you want money, at that time, if the window is not open, then you will not be able to take out money. But yeah, of course, it is like very frequent windows are open. So that risk also can be manageable. It is not like every day you need money. So that is can be manageable. The second risk is the derivative risk, arbitrage risk, and long and short. These are the strategies normally into derivative markets these fund managers is going to play. So here the risk is like which AMC is capable enough to make this happen, to manage it very efficiently. Which are the fund managers, those who are very efficient on this. So we need to read carefully, understand carefully who are the AMCs and who are the fund managers. Those are very good in derivatives and they can play a vital role. So the wrapping product is good, there is no doubt about it. Taxation is also favorable for you. So just there are two risks. Market risk to anyway there. So mutual fund investments are subject to market risk, that is anyway there. But at the same time, the strategy risk is also there. So we need to understand. So before going ahead and investing, you need to talk to your advisors, talk to your distributors to understand more and then get into it. In nutshell, very simple product, but it is not for retail investors. People, those who can invest at least 10 lakh rupees and hold it for a period of time, they should go, and investors should be very mature to understand the derivative and how it is going to be managed. Second, this is again tax efficient investments. Third, again liquidity is there, but interval mein liquidity is there, so you have to be prepared for that as well. We hope this will be adding value to a lot of investors, those who can afford more than 10 lakhs in one go. And obviously because of wrapping product and managed by different AMC, the qualified fund managers are going to manage it. So if you are the person who is still trading in derivatives, still investing in direct equities on your own, it is better to give that money to the SIF format. So I think they will be doing better than what you are doing today. And the chances of losses, the kind of losses the trader is making in Indian equity market is huge. So those kind of losses can also be stopped. And people, those who are dealers, those who are playing with investors' money, those things will be also going down. So more serious players, more serious investors will be evolving, and due to this particular product, we are expecting that the industry is going to get a lot more money, and serious fund managers are going to manage your funds. So nothing to worry. Still, if you have any doubts, you can contact any of your advisor or can contact us to know more about it. And in the last, if you like this video, please hit the button, share this video with your friends and family, and do like and share. Thank you.